What's up, you guys? This weekend, Warren Buffett and Berkshire Hathaway had their annual meeting, and one of the big takeaways was the airline stocks and really why Warren Buffett and the company decided to get rid of them. If you want to watch the whole interview and the whole stream, I will link it down below. I really think that you should check it out. And there is a really good snippet about the things that Warren addresses and his issues kind of with the airliners and how he thinks that they're going to change for the worse in the future. And the point of this video is to address them, to give my opinions on them, to kind of give my counter arguments to some of the things that Warren is saying. Now, I'm not trying to go against one of the greatest investors of all time, but kind of to play devil's advocate here. And if you are an airline investor, really to give you my ideas of, what the best play is here. I do plan on buying some airline companies, and we're going to actually do a full breakdown on the balance sheets, on the fundamentals, on the income statements of all of the major airlines. So sit back, relax, and let's get this started. Now, one of the biggest problems that Warren brought up with the airline companies is that they carry a lot of debt. And now, yes, this is true. Really, any airline company, cruise company, any hotel, they're all going to carry a lot of debt. And if you've been a part of my Capitalist Academy, we've talked about this, we've gone over this. And if you're an investor, you already understand what is going on. Now, a lot of people were kind of worried and skeptical a couple of months ago when we didn't see an initial bailout on the airline companies. And my rebuttal against the debt situation is that as long as things get back to normal, most of these airline companies that we're going to go over, were doing fine before this situation. And in my opinion, I do think we're going to recover. I do think that we're going to get through this. People still flew after 9/11, but Warren did question if the demand for flying would return after this pandemic. And really one of his biggest questions is, what is life after this virus going to be? How is it going to affect businesses? Most of these airline stocks were great companies before this happened, and I think the demand for flying is still going to be there. While a lot of businesses have seen over the past couple months that they can run their companies from home and not have to travel as much, I still think that people are going to be flying for business. I think if anything, people are going to be traveling a lot more once this has passed because we've been cooped up for so long. And I think that the airlines will recover just fine. Now, as far as the cruise stocks, and I've made other videos on that, and I will link that down below and put a card up here, I think that they're going to have more trouble getting things back to normal. But I think that as far as the airline companies and stocks are considered, business is going to be back to normal probably within a year. Now, the big question is, how will they fare during that year? That's going to really dictate this whole debt situation and how that's going to be paid off. But what I want to do right now is actually deep dive most of these major airlines, because I get a lot of questions from my students asking what are my favorite airline stocks, what do I look for in an airline stock, and we're going to go over all of that right now. So here we are on the computer. We're going to go over the four big players: United Airlines, Spirit Airlines, American Airlines, and Delta Airlines. Now, if you guys don't understand how to read income statements, how to read balance sheets, I've made a couple videos on YouTube, but I will put my introduction to the stock market course down below where I teach you all of this 100% for free. It gives you a little bit of an idea of what the academy is like. And if you are interested, shameless plug, you can go down the bottom and I'm going to put my private stock market academy. We have over 50 hours of courses and lectures. New lectures and courses are uploaded weekly and monthly. As well, you also get access to our Discord community where me and 185 traders go live every single morning, go over what I'm looking at, what I'm buying, I answer questions. It's a great community to be a part of. If you use the code FIRST15, you will get $15 off your first month. So let's go through these pretty quickly. American Airlines. We are using the TD Ameritrade web platform. You can use Yahoo Finance, anything. We can see $4 billion market cap, EPS of negative $1.87. Therefore, we don't have a PE ratio. No annual dividend. I wouldn't expect that. Now, if we go to fundamentals, we go to income statement. You have to remember these numbers are going to not have any reflection or anything to do with what's going on with. I don't know if I can say that because YouTube doesn't like it, but it's not going to have anything that's going on with this whole situation. But we can see how these companies, and this is very important, we see how these companies were doing before this whole situation ended up happening. if one of these airlines technically was a bad company before this happened, you're not going to want to invest in them with this happening. So let's take a look. All these values are displayed in millions. Okay, so remember that. We have nice growth in revenue. The biggest things I like to look for is revenue growth. I like to see net revenue growth because it doesn't matter how much money you have or you're making if you're not keeping more money every single month or quarter or year. So we can see slow growing, but growing revenue. So that's not terrible, because the airline industry is not it's growing, but it's not like an exponential growth like type of sector like tech where, you'll see these huge returns and this huge growth every single year. If we go down, we look through, like I said in the introduction course, it's free. I'm going to put that down below. You're going to learn how to read everything line by line, but so we're not sitting here for an hour. We're just going to kind of briefly go through these. We want to see total net income. So you can see 2015, we had 7.6 billion. And then since then, we're going down and down and down. Now, this is not a good sign. If you're making more money year over year, but you're not holding on to more money, I'm sorry, let me rephrase that. If your revenue is growing year over year, but the company is not making more money year over year, that is a bad sign. This could be because of debt. This could be because of poor things and judgment and actions that are happening within the company. We'd have to do further research, but this is not good in my opinion. Let's look at our balance sheet. Now, I wouldn't say I'm as conservative as an investor as Warren Buffett. Warren Buffett and Benjamin Graham, by their standards, you need to have a 3-to-1 or minimum 2-to-1 total liabilities to total assets. And if we scroll down here, total assets growing, kind of peaked out year over year. We have 59 bill and in total liabilities 60. So that is not good. That is less than a 1-to-1 ratio. They actually have more liabilities than they have in assets, and that is considered insolvent. Now, a lot of people think insolvency is like you're out of business. No, you're insolvent if you have more liabilities than you have assets. This is not good. I would not invest in American Airlines. Now, if we go back, this has one of the riskier of all these major airlines, I would say, but the higher reward chances. We're trading here. This was a stock that was trading at $35 a share. Back in January, October, we're actually up near 35. And now we're down around 10. Let's take a look at UAL, United Airlines. Little bigger market cap here. EPS is actually positive. Now, that's going to change with everything that's going on. PE ratio is 7.22, and we are close to our 52-week low. So 52-week low is $17.80. 52-week high is $96, and we're at 24. So I would say, depending upon what's happening, just off of the 52-week low and high, we're at a very fair valuation. Income statement, nice growth year over year. That's something that we want to see. Obviously, that's going to be tarnished. And total net income, 2015, I guess, was a good year for all these companies because you can see this is a huge bump. But overall, let's just look at the last 4 years, growing. Not by much. We kind of were stagnant in 17, 18, but from 18 to 19, growing in net. This looks a lot better, guys, a lot better. So already, let's look at the balance sheet, but I would say UAL over AAL. Total assets, 52. Total liabilities, 41. So already, UAL, in my opinion, is a much better investment. And this is a company that was trading at, $90, $95, and now we're down to 24. So very nice potential returns. And I will say here, this is not a sector that's going to return all the way back up to highs very soon. This would be a 3 to 5 year hold, but to double, triple, quadruple your money in 3 to 4 years, you're taking on a lot of risk. still not bad. Very attractive in my opinion. Spirit Airlines, SAVE, market cap of much smaller, 830 million. Now you got to realize market cap is going to change depending upon the price of the stock. EPS $4.89, PE ratio of 2. Obviously that's going to change. Let's go back to summary. 52-week low, $7. 52-week range high is 55.21. So it's, we're trading at the low. Let's go to your income statement. Income statement here, we have total revenue. Very nice. Steadily growing. See, this is what I'm trying to explain. Before this whole situation, this was a pretty steady and pretty, decently growth sector. So it's, before all of this happened, these would not have been the worst investments. They would have been pretty good in my opinion. And that's why somebody like Warren Buffett would invest in a company like this before all of this happened. Net incomes, obviously much, much, much lower numbers. Not terrible. I like it better than UAL. Than American Airlines, but still, I would say out of all of them, UAL is my favorite so far. Then I would say it feels safest in SAVE and then AAL. And Delta, I've already done some research, and I'm going to talk about my plans with this and what I plan on doing in a second here. Delta Airlines, market cap $13.9 billion, so the biggest market cap that we have out of any of them so far. EPS $5.39, PE ratio $4.48, no annual dividend. 52-week low $19.10, so we're close to that. We're at $21.94. Then we have the 52-week high $63.44. If we take a look at the fundamentals quickly, check out our income statement. Very nice consistent growth year over year in total revenue. Total net income. We're not going to count for 15 because that was a good year for everybody. 2016, 17, 18, 19, we kind of went down and then back up. I like this. And balance sheet. Total assets, 64. Total liabilities, 49. Now, let's talk about my plan, right? And the sector in general. The sector, I believe airlines will come back. I do. I think that with bringing on a lot of debt as a whole sector in general, the smaller companies could get screwed. I think that a company like SAVE or Spirit Airline, the risk is nice. Financially, it's a better company, even though it's worth a lot less, I think, than American Airlines. I think if any of these companies could go bankrupt, it would be AAL, and I would not personally invest in AAL. SAVE, it's a smaller company. Chances of bankruptcy are a lot higher, in my opinion. I would not invest in SAVE. So, it's not terrible. It's not a terrible investment, I would say, actually. But when it comes to the big ones, the more I look into them, Delta and United Airlines are the two that I really like. Out of those two, Delta is by far what I would rather invest in. Simply because bigger market cap, better name, better brand. I know more people that fly Delta. I know that they have a great reputation. They are fundamentally, from a balance sheet income statement standpoint, they're looking pretty sound right now, but before the whole situation happened. The only thing that's a downside to Delta is the potential rewards are a lot lower than they are in, something like American or Spirit Airline. I like Spirit Airline. I think that their rewards are better for Spirit Airline, but Delta overall, I plan on buying. If we can get back down, I would start taking this. I talk a lot about position sizing and how many buy-ins you should do. I would start buying around $20 a share, and then I would take another buy-in around $17.50 and then another buy-in around like $12. My last buy-in is always more. So ultimate question, do I plan on buying airline stocks? Yes, Delta Airline at $20 is going to be a buy for me. So let me know what you guys think. The last thing that I want to talk about is if you are in the airline stocks, what should you do? If I were you, and this is just me personally, I'm not certified in any way, I would really look at yourself and understand, like, do you know what you're investing in, and do you understand the real time horizon for an investment like this? I feel that a lot of people jumped into these airline companies and these cruise companies hoping that they would bounce back really quick and hoping that they would, come back as fast as they sold off. And the truth is that's not going to happen, guys. Things like this take time. If you're in a cruise company, you should be planning to hold that for 5 years. If you're in an airline company, you should be thinking of holding that for 3 to 5 years. Yes, everything can come back pretty quickly, but I don't think that these companies are just going to rebound the same way that we're seeing the stock market rebound. So there we go, guys. If you have any questions, let me know. Comment down below what you're going to be doing, if you're going to be buying, if you're going to be selling, what your thoughts are, guys. I would love to hear them. Also, hit the like button, subscribe. We're almost at like 1,400 subscribers. So thank you guys so much. Until next time, I will see you and have a good day.